What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video, we're going to talk about a topic that I think can be greatly misunderstood in the dividend investing community, something that people really hold near and dear to their hearts that I think you just need to stop worrying about. That's right, you need to stop worrying about the share price of your dividend stock. Now, I know that sounds like lunacy. That sounds like a crazy thought that you wouldn't value the price of your dividend stock. And I'm not saying that it's not important at all. It clearly has some value there, especially since that's how we derive our dividend yield. But I want you guys to stop worrying about whether or not your share price is going up. In fact, for me personally, I would prefer it if my dividend stock prices stay stagnant for as long as possible. And I'm going to explain to you why in this video. Specifically in this video, I'm going to share with you exactly why I like my dividend stock prices to stay low or just stay as flat as possible for as long as possible. We're going to talk about how our share prices impact not only our overall value of our portfolio, but also our dividend income in the future. And lastly, I'm going to show with you with my dividend stock portfolio exactly the massive difference that can occur if you have a portfolio that's stagnant versus one that is growing at, say, 7 to 10%. You guys know I always want to value your time and I never want to waste it, and I want to deliver massive value with every video I put out. So without further delay, let's get started. Guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. Alright guys, so before we get started, just a quick reminder, the Patreon community is growing quickly. I'm excited to have that community with you guys. And if you're interested in joining the Patreon community, if you want to get access to my monthly dividend stock spreadsheet, if you want to get access to all the spreadsheets that I use in all of my videos, and potentially even access to when I make specific changes in my portfolio the day that I make them, check out the link in the description below. Based on many people asking, I am going to open up a Discord channel for the Average Joe Investor Patreon community, so look for that to happen here in the next week or two. Just know that you can get started for as low as $5 a month. Alright, let's get into the meat of this. Why do we care so much about our share price? I think inherently, right, as a regular investor, we want our portfolio to go up in value, and that's reasonable. I get that. But we have to ask ourselves, why are we investing in dividend stocks? What's the purpose? If our purpose is we just happen to be investing in dividend stocks, but really we're an overall return investor, we're just looking to pick up quality companies at reasonable prices and they happen to pay a dividend, well then maybe you're focused a little bit more on overall value, and maybe I guess you can worry about that share price over the long term. For me personally though, I have a different purpose for investing in dividend stocks. I want cash flow. I want cash flow now, not so I can use, but so I can reinvest, and I also want more cash flow in the future. So as a result, I mean, if you think about this mathematically, when your share price goes up, then the amount you have to pay to get the dividend goes up as well, meaning you are getting less dividend income because you're getting less shares of the stock. Your overall value is going up, but your dividend income is going down. For me, it's a long game approach to generating as much cash flow as possible. As a result, I personally am hyper-focused on accumulating as many shares of dividend stocks as possible, because the more dividend shares I have, the more income I get both now and in the future. A perfect world would be a stagnant dividend stock, one that has as little growth as possible, yet is still a healthy company and pays a healthy dividend that can grow in the future. That for me leads to a significant accumulation of dividend stock shares. That's why I target companies at high dividend yields that have stagnant prices, right, as part of my portfolio, and why I don't worry when they potentially go down in value. Is the company still a healthy dividend stock? If the answer is yes, I don't worry about the share price. Now, maybe we have a little bit of a different discussion about closed-end funds and certain types of covered call ETFs, right? They still, I think, have a place in your portfolio potentially, but you have to be more mindful of the fact that some funds might be paying out some of your actual capital or over the long term significantly eating into your principal value to give you that high dividend, and that can be a concern. So let's go ahead and jump into my dividend stock spreadsheet so I can just show you and model for you exactly the difference that occurs in a portfolio over the long term if we value stagnant, from a share price perspective, stagnant dividend stocks versus ones that have high growth in the share price. All right, guys, so we're in the exploding dividend income spreadsheet that I previously put out to you guys there on Patreon and modeled in a previous video. And I made a few modifications, so I will reintroduce it back in Patreon so you guys can see this as well. We added a new tab down here. So we've got our calculations for a growth dividend stock and then a calculation for no growth right here. Let me go ahead and actually scroll right up there. There we go. So we've got price compound annual growth rate, dividend compound annual growth rate, starting yield, and then our contribution here. And then we have a new tab here for no growth. Same information, except, let me just scroll all the way to the top here. Same 10% here, same starting yield here, same contribution here, but our price right here is 0% on the compound annual growth rate. How does this impact a portfolio's results over the short term, midterm, and long term? Now, one thing to remember before we look at the results here is that there's only so much we can model in Excel. We can't model perfectly what could happen in the future, A, because we don't know, obviously, but B, also because it's hard to predict the ups and downs of a market on a daily basis. So as a result, we're going to go ahead and use straight line appreciation, meaning that when we say that the price is going up on this other tab here by 7% annually, it means that every day it's going to incrementally go up. When in reality, we know that a dividend stock is likely to vacillate up and down. Up a little bit, maybe down a little bit, up higher, then down a little lower. And there's just no real great way to model that. So I would say this is the standard way of thinking about dividend stocks, right? We expect an average appreciation of, let's say, 7 to 10% every year over the long term, and we want a dividend that is growing. And again, this is from a portfolio perspective, okay? So this is not just one dividend stock, it's a portfolio view. Whereas this is what I'm talking more about here. Looking for a portfolio that is not necessarily looking for stagnation in the price, but being okay with it if we come across it, especially if we have a heavier concentration of dividend stocks that are high yield, low growth. So what actually happens here? Let's go ahead and take a look at the graphs. So we've got 4 different results here. We've got value growth, value, and no growth, reinvesting value growth, and reinvesting value no growth. Let me go ahead and define these really quick. These two here are not reinvesting dividends, okay? We're not reinvesting dividends in this scenario, and we are here. And maybe the truth is we're just not gonna do this. Most people are not going to be not reinvesting dividends if we're in the accumulation stage of our dividend journey. So let me go ahead and make an adjustment here. We'll look at just the reinvesting values. All right, guys, so here is the first of our 2 results. We're going to look at the portfolio value over time, okay? So this is reinvesting value, our overall value, reinvested dividends with growth and no growth. And I mean, look at these results here. The results are stark. The yellow line is the one with no growth, and we can see that they were almost the same, but we actually need to zoom in and get a closer view of what's actually happening down here, because it's hard to see since we're looking at these numbers here, but it's clear that reinvesting dividends with no growth in the portfolio eventually leads to catastrophically higher, massively higher portfolio value, and my guess would be the same in dividends as well. Let's go ahead and bring this down and see a view right down here. All right, so if you guys notice here, we changed the axis on the x-axis to a maximum of 500,000, so we don't get the full view, but that's okay because we can see the differences in these portfolios in the short term, right? If we start here in October of 2021, they start the same, and out of the gate, it looks like the portfolio that has growth is outperforming, sometimes by a significant portion. If you look right around here, the difference is almost 50, no, not quite, but maybe like $40,000 to $50,000 in value difference, But at some point along the way, all those shares generating more income eventually propel the no growth portfolio to way higher results than the portfolio that has growth in the share price. And that's just purely because of massive amounts of share accumulation in that dividend stock. If you notice, things get really out of control here when we get to year 25. 26, I'd say, things just blow up for the no growth portfolio. All those shares and all that income that's not being used, and we can talk about the viability of that, whether or not you would really go 30 years without using the income or not. But the point is, if this portfolio was allowed to just grow over time with these high yield dividend stocks with low growth, things just absolutely blow up here to where the portfolio just, what is it, 10x here in like 4 or 5 years? From 2046, we were valued at around 3 or 4 million. Now we're up here north of $20 million. Now this portfolio here is not bad. I'm not trying to say this is bad. I'm just trying to juxtapose growth versus no growth over the long term, as long as you are owning healthy dividend stocks that continue to raise their dividend. Now these results also were assuming a 10% dividend growth rate. Let's see if we change that. Let's change that to 7%, which I think might be a little bit more reasonable. How that changes the results. It's clear that dividend growth rate does make a significant difference, because we can see now that the top portfolio, still the no growth portfolio, it happens around the same time where the change occurs over here, right around 2045, or about 25 years. But the difference here is we're only up around, I don't know, $2.5, $3 million, as opposed to being at around 1.5. So it's still a big difference, right? $2 million difference. And things are going to keep going bigger and bigger after we go from 30 years on. It just means that that dividend growth rate is really critical. But again, this is all about portfolio value over time. Is it really that critical? I mean, I've already just told you that portfolio value is not that important. So let's look at the actual dividend income. That's why I'm investing, not for portfolio value. So this is total dividends paid, okay? Not dividend income per year, but look at this, guys. This is no growth and growth here. We can see that the total dividends paid with the growth portfolio is right around, I'd say, $400,000 by year 30. Okay, and the dividend income per year is going to be growing from this point pretty significantly. And up here, we're at over $2 million. With the no growth portfolio. And that's why that portfolio value is also outperforming the growth portfolio as well. Okay, so we just looked at total dividends paid. Let's take a look here and let's factor in some different growth rates and see what would annual dividend income look like. Again, growth versus non-growth here. This is staggering, guys. I want you to really take this in. This is a chart of annual dividend income over those 30-year periods, depending on growth versus no growth, and 5, 7, and 10% dividend growth rates for the portfolio. This information is staggering. Look at this. So we've got 5% dividend growth rates right here. So this is the 5% growth rate with growth. Income never gets more than like 20 grand even after 30 years. Then this is the dividend income after 30 years with 7% dividend growth rate. We're up around $50,000. Okay, that's all right. And then up here, the blue line, okay? Blue line is if we've got a 10% growth rate. Now we're talking here, we're at $150,000, right? But look at what happens if we have no growth in the portfolio, okay? No growth in the portfolio. This is the 5% growth rate. So if you have no growth in the price, but you're growing at 5% on the dividend growth rate here, you're getting the same result from a dividend income perspective. If we're looking at a 7% growth rate, these numbers are astronomical. We're at over 100 grand in income after 23 years. We're up over 250,000 by year 26, and it just really explodes from there. And then we've got a 10% dividend growth rate here with no growth in the price. We're at, oh my goodness here, we're at 100,000 after 19 years. We're at 250 after 22 years, and then it just really just completely takes off. Let me just show you from the chart so you can just see the numbers here. This is with growth. We're at 21,000 with 5% dividend growth rate, 45 with a 7% growth rate, and 167,000 after year 30 with a 10% growth rate. But if we do no growth here, guys, these numbers are epic. Look at down here, year 30, 171,000, then 738,000, then 16 million, which is just stupid high. Now, I know that this is making a lot of assumptions here, right? I get that, and I know that it's unlikely that we would hold for 30 years with no growth and a 10% dividend growth rate, but I'm just trying to give you an idea of how the compounding really just blows up for you if you wait long enough and you've got a dividend growth rate as a priority and stagnant price appreciation. It's all about accumulation of as many shares as possible with the investment that is growing the dividend. So the big takeaway I want you guys to have here is it's not about price appreciation. If you're trying to build cash flow a little bit now, yes, but for most part in the future, don't focus so much on the price of your dividend stocks. Focus on dividend yield and focus on dividend growth rates. And of course, buying healthy companies. That is going to lead to an astounding amount of dividend income and cash flow in the future. Now, later this week on Friday, I'm gonna put out a new video for you guys, really focusing on a question I got in the comments, where we wanna talk about how can a company raise its dividend if it has a net operating loss or a net loss on their financials. I had this question, I wanna share that with you because it's not about, a healthy company is not about net losses. Maybe it is over the long term, but in the interim, in a 1 year situation where there's a net loss, that doesn't mean that the company is not cash flow positive. We're gonna differentiate between cash flow and net income in the next video. I'll give you an example of that. Hopefully it's gonna be a big value to you guys. Make sure to leave your 2 cents in the comments below. Let me know what you think about this video, what you like about it, what do you wanna see more from me about on this channel. I'm really open to your guys' feedback. As a reminder, check out the Patreon community. There's a link in the description below. You can join and get started for as low as $5 a month. That Discord channel is coming too as part of the Patreon community. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.